Hey guys, welcome back to my YouTube channel. I'm very excited that we have come to the end of the week. This week I released over 3 videos for the refined series, the beginner's guide to trading, market structure and time. And today I just want to go over post NFP price action. Right, so to set the record straight, I did not engage in the market today. So what I'm basically doing now is just going over price action and explaining in details how I could have engaged in the market today if I decided to. It's still the beginning of the year. We are still in January. You don't have to blow your accounts. It's too early to blow in accounts, and if you've blown your account already, then I have one thing to say to you. Trading is a marathon, not a sprint. So take it easy on yourself. Don't get hard on yourself. Don't beat yourself up. You are growing, you are learning, you are improving every day, and that counts. So journal your trades, go over this week and ask yourself really honest questions like, how did I perform this week? What could I have done better this week? How would I have engaged price this week in a better way compared to the way I engaged price? Did I stick to my rules? If I didn't, which rules did I break this week? And how can I improve for next week? I also recommend that you take this week to backtest, to journal, and to appraise yourself. Stay accountable at all times, and in no time you're going to be killing it in this market. I'm rooting for all of you. Okay? And I also want to say thank you to everyone who was engaged, liked, shared my videos. Your support and love is crazy. Like, I'm not even going to lie. I wasn't expecting this, and it's just so awesome the way you guys are responding to my videos. We just crossed the 50 subscribers hallmark, and I'm really excited. The beginner's guide just hit 85 views, and I'm so excited. 15 more views to 100 views, and it's gonna be awesome. So let's just dive right into what price did today. So this is Friday, and as usual, we begin with answering the first question, which is, what is the market structure? What is the market structure like on the asset classes? This is the 4-hour time frame, and looking at this 4-hour time frame, let's go down to the 1-hour time frame. So this is Monday, and as you can see, this week do not look like a week you should be engaging in any bearish move. The week was so bullish heading into Friday, so I would be leaning more bullish on the day than I would be leaning bearish. So the first question you want to ask yourself is, what is the market structure like? And in this case, we are bullish. And if you don't understand what I just said about market structure, I have a video on market structure explaining what I just said now, why we are bullish. So you can go in and watch the video. Now the second question is, prior to 8:30 opening, are we at time discount or at time premium? Today began at by the 00 clock, the opening price is 25,524.1. 524.1 is the true day open, and relative to 8:30 or prior to 8:30, right? Prior to 8:30, which is here. I'm going to mark it here. This is 8:30. Prior to 8:30, we were above the daily open. Now, if we are above the daily open and we are leaning more bullish than we are leaning bearish, what do we want to see? We want to see price manipulate below the daily open for us to look for longs, or price put on a bearish SMT for us to look for sales above through day opening. Because remember, we buy above through day opening and sell below through day opening. Sorry, we buy below through day opening and we sell above through day opening. And like I said already, we've established the fact that going in today, we are leaning more bullish than we are leaning bearish. And because of that, we want to buy below through day open. And before 8:30, we were pretty above through day opening. So you don't want to be engaging in the market until you've seen price manipulate below through day opening. And to also add additional confluence, we have the session opening at 25,572.6. This is the session opening, the true session opening. And when I mean session, I'm talking about the New York AM session. And as usual, I've not left you guys without what I'm talking about when I'm talking about what I'm saying. I made a video about time and I explained the New York session, the New York, and everything about the session in the video. So go back to the video, watch the video, and you understand perfectly what I'm talking about. So with price above both through day opening and through session opening at 8:30, you don't want to be engaging in longs. Okay, personally maybe you could be, if you're a professional trader, then you might look for sales, but I will not advise that. And another thing I will not advise also is engaging price before 8:30. And also I will also advise that you engage price immediately after 8:30 for the Nasdaq futures, because unlike the currency pairs, the Nasdaq futures have a specific time when the market opens, and that time is 9:30. So every price action before 9:30 opening to me is just not reliable, and I cannot make my judgment based on any price action I see prior to the 9:30 opening. Okay, so establishing that fact, we've established two facts already. Number one is market structure. Number two is relative to the 9:30 opening or 8:30 opening in this case, because we're analyzing post NFP. Are we at time discount or time premium? The answer is we are at time discount. Why are we at time discount? That's right, we are below the true session opening and the true day opening. Now, this is 9:30 opening here. This is 9:30 open, and at 9:30 open we had this manipulation low, and I want you to observe what price did here at 9:30. Also at AS, you could see that we did not manipulate as low as we did on NQ. And because I'm using these terms, our next video on the series is going to be about order flow, and I'm going to talk about accumulation, manipulation, and distribution, so you understand what I mean when I say price manipulated. So basically, if you're looking for buys, right, we want to see price manipulate. If you watch the video on structure, you understand this better. This manipulation is a fake downward move to take out a low, because in a bullish market we are rejecting lows and breaking highs. So we want price to give us a fake move, take out a low, and then move towards our direction. Now this move downward is the manipulation leg, and it has one objective. The objective of this manipulation is to take out this low, and as soon as price takes out this low, we want to look for opportunities within this series to get in the market as price pushes higher to our objective. Okay, so let's drop down to the 1 minute time frame. You might be wondering, this blue line, what is this blue line? This blue line is marked at the Asian low of today. So Asia opens up at 18 o'clock, and this indicator I'm using to view this box here is the Asian price action for today, and I'm using the time cycles indicator. So shout out to Frank369 again. And if you notice what I just marked out here, you would see. Now the question is, why didn't you engage in this price action as price came here? The truth of the matter is, experience will teach you not to engage in times like this, because looking at this chart, all I'm seeing was a strong manipulation at 9:30 opening. So this is what happened at 9:30 opening. So remember, this Asian session low is a session liquidity, right? We'll talk about session liquidities during this series, so watch out for the video on session liquidities. So on the 1 minute time frame, I'm dropping down to the 1 minute time frame because that's my entry time frame, right? This is the 9:30 opening, and you can see after this 9:30 open, we had this manipulation leg up, and we could see price playing around because of the way this 9:30 opened, right? And price reaction of the 9:30 open. Left to me, I wouldn't have engaged price, and the reason why I wouldn't have engaged price at this point is just basically experience. Okay, experience. I've seen price put in this sort of manipulative moves over and over again, right? And the funny thing is that at the time price put in this manipulative leg at 9:30, price came here and swept the London slow, right, which is a valid liquidity to push price higher, right? Now if you had engaged after this London slow was manipulated and preserved, because remember, in as much as we also want to engage price and price putting a manipulative leg low, the confirmation that price is about to reverse is when we see an SMT. So an SMT is basically a crack in correlation. We'll talk about that in this series. So let me just give you a picture of what I'm talking about. So this is it. This is NQ. And NQ comes, manipulates and takes out this low and moves higher. And this is ES, which is also a correlated pair with NQ. And when I mean correlated pair, I mean they move alike, they move in the same direction. Okay, and you see ES ES does something different. So whereas NQ came and swept this low, ES on the other hand didn't sweep this low. So that difference in correlation, that crack in correlation. We call it a crack in correlation. So as what we expect from these two pairs is that as NQ took out this low, ES should take out the low as well, but ES did not, and this is a very strong sign that we are about to reverse. So I just introduced the concept in we'll not talk, we'll expand on that concept as we move on in the series. So you could see that at the same time, this is 9:30. At the same time, ES did not come to manipulate this 230 low, and that would have been a very strong reason for somebody to like engage the market. But bringing my experience to the table, I'm not interested in this sort of push. There was nothing significantly compelling about this price move here, and I wouldn't have engaged in it. And like I said, experience is coming to play here. Compare that move, compare this shabby move, right, to this move here, and I recommend that on NFP days, the best time to always look for trades is during the macro time, and the macro time is from 9:50 to 10:10. So the last 10 minutes of the hourly candle and the first 10 minutes of the next hourly candle. The last 10 minutes of the previous hourly candle and the next 10 minutes of the next hourly candle. Now compare that move to what happened here. Now we have a clearer price action, price coming to sweep this low, creating an SMT with Asian low. And when I mean SMT with Asian low, I mean, look at this. This is the Asian low here. This is the lowest low that was formed from 18 o'clock to 00 o'clock for me. But this box also tripped into, so yeah, this is the Asian low. I personally use 18 o'clock to 00 o'clock for the Asian. This is just is an indicator, so I would ignore it creeping to 2 a.m. 2 a.m. for me is London time. But you see, when you understand what you're doing in the market, you will not be depending on indicators to validate what you know already. So look at this, price comes, sweeps this low, and at the same time price sweeps this low. ES preserves that Asian low. Asian low on ES is preserved, which is this low here. You can see price did not sweep that low. And at what time did this happen? This happened at 10:08, which is within the 9:50 to 10:10 macro time. 9:50 to 10:10 macro time, and this manipulation occurred at 10:08. I want you to pay attention to this. Look at the first sign that price was about to reverse. We had price close above this inverse fair value gap here. As soon as price closed above this large bearish candlestick here, this created an order block and it changed state of delivery. We talk about order blocks when we release the PDRA series. So price closing above this last bearish candlestick, this large body candlestick here. Compare this closure to what you would have engaged in here. Trust me, this reversal looks more clean than this. And I would have sat out this move and rather pick this move here. So what the price did here, accumulation, manipulation, and then we distributed. then we distributed. Now, as traders, what we want to do is to find opportunities in this distribution leg. We don't want to be engaging in these seasons. We want to wait for price to tip its hand that is about to reverse. And one of the key ways we know price about to reverse is price puts in an SMT. And immediately price put in this SMT at 10:08 inside the macro time as extra confluence below the 2-day opening and the 2 session opening. We had price close above this large bearish candlestick here. As soon as price closed above it, this creates our CISD. You could begin to see that price began to displace above bearish fair value gaps, right? And you could see also price coming to fill this. All these are all entry opportunities. All these were all entry opportunities, right? You see this fair value gap filled here. And we saw price close above this breaker plus fair value gap is what is for many of us who are ICT traders who understand that this is called a unicorn model. So when we have a breaker plus a fair value gap overlapping each other, this is a perfect entry position. Your stop loss could be here, right? And me, I look for the 4:4.5 risk to reward ratio on all my trades. Okay, I'm just showing you entry opportunities that you could have participated in this market. And as soon as price broke above this high, we had a break of structure. And if you don't understand that, go and watch the market structure video. You understand this clearly. And as soon as price broke there, we could see this fair value gap that price came to fill and was a driver for price higher. So these were all entry opportunities that you could have participated in on today's price action. And we had price putting on new highs as we proceeded into the day. Right now we are consolidating and we are about to close for the week. So in this video I talked about first thing, or the first question we answered is price bullish or bearish. Or the second question we answered, are we at time discount or time premium? So the first answer was we are bullish on overall on the 1 hour time frame. Okay, and number two, we are also bullish relative to when price traded below the 2-day open and the 2 session open. We want to engage in buys during those times. The next question we answered was there an SMT? Yes, there was an SMT, and this SMT occurred inside a macro time for additional confluence. And what is the rule for engaging the reversals? We want to see a change in the state of delivery. Did we get that? Yes, we got that. The first state of delivery was this inverse value gap, that we had the CISD, then we saw price blow above this bearish value gap as well. Then we had this unicorn model here, and as soon as price broke structure here, we had this fair value gap here that was used to send price even higher. Okay, so I hope this video was insightful, and until next time, happy trading.